Get ready for a roller coaster ride, because guess what? The bond market yield curve is in the spotlight. Yeah, the curve with more twists and turns than a soap opera has got everybody talking about recession. But should we be worried? Stay tuned to the end as we check in with Simon, our resident stock market oracle, for the answer. But first, hold on to your monocles. Let's talk about the bond market. Now, this ain't your grandma's tea party. This is a place where folks buy and sell bonds which are like IOUs for the government or corporations. Imagine your buddy owes you $20, but you want to make it official. So you write up an IOU, slap an interest rate on it, and there you have it. You've got a bond. So when we talk about the bond market, we're talking about this big board with squiggly lines and numbers, and lots of people in suits, all looking very serious. Now, I know what you're thinking. Alex, you handsome stock market guru, why should I care about all this yield curve business? Well, it's not just economics, it's drama. We're talking about your money, your job, and your favourite pizza place going out of business. The yield curve is like the heart rate monitor of the financial world. It shows how interest rates on bonds change over time. Now, the yield curve has been on a wild roller coaster ride lately. Some folks say it's bear steepening. So what the heck is bear steepening, you might ask? Well, it's not the latest dance move craze. It's when the difference between short-term and long-term interest rates gets bigger. You see, the yield curve isn't flat. It's curvier than a roller coaster, and it's got everybody on edge. When the yield curve gets steeper, it means that long-term interest rates are going up faster than short-term rates, and that can be a sign of something ominous. Recession. Now, the yield curve is talking in whispers, and we need to decode it. When short-term rates are lower than long-term rates, it's like the economy's saying, yeah, I'm doing okay right now. And when it inverts, with short-term rates higher than long-term rates, it's like the economy's hinting, I think I'm coming down with something. But when it steepens, like it's doing now, it's like the economy's saying, maybe I need to call in sick tomorrow. So what's the deal with this potential sickness the yield curve's warning us about? Is it just a little cold, or is it a full-blown recession? Well, the bond market's like a horror movie right now, and the bond investors are the terrified victims in the dark alley. When the yield curve steepens, it's like that ominous background music's telling us that something's lurking in the financial shadows. But here's the catch. The yield curve's track record as a recession predictor isn't perfect. It's more like your uncle's barbecue forecasts. Sometimes he's spot on, and sometimes he's grilling in a thunderstorm. So what's the economic outlook? Should we be hoarding canned beans and building bunkers? Well, not so fast. Predicting the economy's like peering into a murky crystal ball. Economists are like modern-day wizards, only with fewer capes. They look at all sorts of factors, not just the yield curve. And hey, there are always other explanations for what's happening. The Federal Reserve, or as I like to call them, the financial babysitters. They play a big role in all this too. You see, the Fed can change interest rates, and they've got their finger on the pulse of the economy. They're the ones who decide whether it's time to raise or lower interest rates. It's like a never-ending game show. Will the Fed raise rates today? The contestants are the economists and the traders, and the prize, well, it's the health of our economy. The bond market's yield curve might be doing some crazy dance moves, but remember, it's just one piece of the puzzle. So should you be panicking about an impending recession? Should you be investing in the stock market right now? We'll check in with Simon, the predictive tortoise, for the answer in a moment. But just quickly, if you're thinking about diving into the glamorous world of investing, Robinhood's your best buddy. They've made it so easy, it's like the financial equivalent of a microwave dinner. Pop it in, press a few buttons and boom! You're in the investing game. And the best part, it's commission free. No sneaky costs hiding in the shadows. Whether you're into stocks, ETFs, or even those wild and woolly cryptocurrencies, Robinhood's got your back. And they even throw in some educational goodies to make sure you're not just blindly throwing darts at the stock board. So sign up for Robinhood and make those dreams of financial glory come true, all while sipping coffee in your pyjamas. Links in the notes below. Now for all you investors out there, it's decision time. Do you bail out and hide your money under the mattress? Or do you ride the roller coaster of the steepening bond market yield curve and hope for the best? Simon, is the stock market a buy, hold or sell?